when we talk about investing in Israel, there are a number of different ways that you can get access to the Tel Aviv Stock Exchange, or for that matter, to any of the exchanges around the world. Okay. The banks and the Israeli investment houses, okay, are the two main ways that you can open up accounts to hold your investments. Okay. The banks are custodians, and the investment houses are also custodians of your assets. And they give you the ability to then buy and sell through your account. Even if you have just a general bank account, you can also hold your investments in that bank, in that account. You don't have to open up a separate investment account. You can have your regular over b'shav, your regular, like, just checking account that you're using for your day-to-day, and you can also hold in that same account, also you can hold investments. Okay. The stock, the investment houses, so there you have to actually open up a separate account with them, and those accounts are generally only used for holding investments. They're not used for checking and for credit card use, etc. They are allocated, let's call it, for holding investments. Okay, there are two main models of financial professionals in Israel. Okay, there are Yoetz Hashkaot and there are Menahel Tikim. And it's very important that you understand the difference. Okay, Yoetz Hashkaot, or investment advisors. So they are almost exclusively hired by the banks. So they work for the banks. They will be in your regular, you're the SNF, your branch that you're at. It could be that your bank might only have Yoetzim in certain branches, but you'll have access to them, and they can give you advice. Okay, they can't manage your portfolio. They can only give advice. The banks generally have a head office that streams information to the Yoetzim to tell them how to help their clients. And the banks receive money from those investments, whether it's from mutual funds or from products that they're selling, and the Yoetzim are allowed to, by law in Israel, to give advice. So they might come in, and you as a client might go in and might ask them, you have a certain amount of money and you want to do this, and you want to have it available at this point in time in another 5 years, and you want to take a certain amount of risk. So they might then give you a list of suggestions. But those are only suggestions, and because you have to make all decisions when you invest your money through the banks, because they are only Yoetzim. Okay, that's the first model. Okay, the banks by law cannot manage your money. And if you ever hear somebody from the bank saying, "Oh, I'll help you, I'll manage your money for you," so then they're not being accurate. What they can do is they can help you to manage your money, but you will have to make all decisions. Okay, the second licensee in Israel, second type of financial licensee, is a portfolio manager, or a Menahel Tik. Okay, and this is where I tell you, just for full disclosure, I am a Menahel Tik as well. I have a license as a portfolio manager, being a portfolio manager, which means that portfolio managers have more flexibility to actually be able to make decisions on your behalf. So our clients, for instance, have accounts at the banks or at the brokerage houses, and they define how they want their money to be managed, but then they let us make the decisions. So we don't call our clients and ask them, "Oh, would you like to buy this stock, or should I put this in your account, or should I do that?" After they've given us their initial guidance in terms of how they want their portfolio to be managed, so then we have the ability to independently trade their account. Okay, and portfolio managers are compensated by a certain percentage of the value of the portfolio, and generally it will vary depending on how much money you have under management. Okay, the banks charge two main fees that you need to know about. One of them is a transaction fee for buying and selling. And the second is a custodian fee. Okay, whether you are working with a bank advisor or you're working with a portfolio manager. So there are those two fees that the banks charge. Now, not in all circumstances, but those are standard fees that the banks charge. In many situations, portfolio managers can get discounts, or they can even get those waived for their clients. But that's basically how the bank is making money. They're charging those two fees, and they're also being compensated by being paid by the products that they're selling to investors. Okay, it's very, very important. We're going to talk about this later also. Anytime you're making an investment decision, you have to know how somebody is being compensated. Because if you don't know how they're being compensated, you don't know where their bias is. And everyone has biases. Okay, everyone. There's no such thing as somebody out there who's giving you objective, independent advice without having some type of bias or background, right? Some kind of negut, as they say in Hebrew, right? With regards to what they're doing, whether it's because they're working for the bank, their employer, or they're selling a product. You always have to try to understand where people are coming from. Okay, so we have the model of investing through your bank, where you just go into your bank and you speak to a Yoetz. And by the way, you don't have to even speak to a Yoetz. Obviously, you can open up an account and you can go online and do your own trading. You can go on and buy your own stocks and your own bonds and mutual funds and whatever it is. Just the banks will give that service to you. They will have a resource of somebody who will be able to help you. And then there are the Menahel Tik, and those are portfolio managers. They work for large investment houses, and they have small, more boutique companies where they're just doing the portfolio management and they're not actually holding your money. So you might have an independent custodian, and then you might have somebody who's like an independent portfolio manager. Okay, those are the two main methods about how to get into the capital markets, right? By having your money held in those ways. Now we're going to go through a number of different instruments that you can buy. The most basic thing that you can buy through the bank, which most people are probably familiar with, are just savings plans or bank deposits. At some banks, they're called Akamim or Pachamim. They've got all these different acronyms, but they're basically going to be savings plans where you're locking up money or you're depositing on a regular basis money. And sometimes you might have to lock it. You can lock it up for a day or a week or a month or a year, right? There are many, many, many different options. You can lock it up with fixed rates of interest and variable rates of interest. They are generally considered to be the most conservative investment that is available. And I would call probably the most standard thing that the average person will go into the bank and just put their money into a deposit in order to make something, so that you're not losing money. Because again, remember, right? It's not just that I'm trying to make that 10% to make my money grow. A very, very important point that I forgot to mention before is that if your money is not earning money, it's really losing money. Because we all know that there's inflation, and inflation erodes the value of our money. So if we have a certain sum of money this year, right, and I do nothing with it, and it's just sitting there in the bank, so next year it'll be worth in real terms less. Okay, so it's very important. So when we're investing in these savings plans, so they will help us to, at least under most circumstances, keep ahead of inflation. Okay. The major disadvantage of these deposits, well, there's two, I guess. One is that you generally have to lock up your money for at least a certain period of time. Again, you can have it renewing on a weekly or a monthly basis, but it's going to be locked up for whatever that term is that you've decided to invest your money. The shorter the term that you invest, generally the lower rate of interest that you'll earn. Okay, so will have a lockup with your money. And the second thing is that generally it will pay out the lowest rates of return available. Okay, so the banks obviously are not trying to, at least not in Israel, they're not aggressively marketing high interest, deposits. They're trying to get by paying generally the minimum amount. And so, but at least you'll try to at least, stay up with inflation. Okay, so they are considered to be, let's call it the lowest level of the totem pole of investing. They are the lowest rate of return and the most secure because they are guaranteed by the banks. The banks in Israel, as opposed to in the United States and in some other countries, are actually considered to be incredibly safe. Right? And Israel has not had a bank failure since the founding of the state. There are really 6 large banks, and they are all very highly regulated. In fact, I'm sure most people would agree with me in saying that they are overregulated in a lot of ways, or bureaucratic, right? A lot of the bureaucracy is because of the regulation. And the regulation is meant to really save people from having bankruptcies like we have in other countries, right? It's not uncommon at all in the United States that banks go bankrupt all the time. Here in Israel, it doesn't happen. Okay, so when you would deposit your money in the bank, I get the question all the time, how safe is my money? So I would say it's pretty safe, right? If you're in one of the big banks, right, your money is really, it is very, very safe. We have not had a deposit that has not been honored, I don't think, since the beginning of the state. Okay, the next thing up on the rung are bonds. Bonds, or in Israel, they're called igrot chov. And a bond is an IOU. It is you lending money to either a company or to a government, right? And that government or that company is going to pay you back your money together with interest. Okay, so you might have government bonds, like in the US, they're called treasuries. Here in Israel, there are Israeli government bonds, not to get confused with the Israeli bonds that are marketed in Chutz La'aretz that are not traded securities, right? Those are bonds that are sold to wealthy Jews around the world, and they are locked up for a long period of time generally. The bonds that I'm referring to here are traded on the stock exchange, which means you can buy and sell them at any point in time. But as long as you're holding that IOU, so that company is going to pay you back at the end of the term, the principal together with the interest. Okay, the higher the risk of the company paying you back, generally the higher interest rate they'll have to pay in order to compensate you for giving them the loan. So when you give a loan to the state of Israel, for instance, they might only pay 4% interest or 4.5% interest because they have a better chance of paying it back. Israel can actually print money, so they have a much better chance of being able to honor their commitments and pay back the loan. If you have to give money to Bank Leumi or to Teva or to NICE or any of the other companies out there, so then they will have to offer you a higher rate of return. So corporate bonds generally will have a higher rate of interest that they have to compensate investors for in order to get them to give them their money, to be able to use their money. Okay, and then the next level up above bonds are stocks. Stocks are ownership shares of companies, okay, that are publicly traded. A company will go public predominantly because they need to raise money, because they need to raise money to be able to function, to be able to operate. So they will float their shares on the stock exchange, and people will buy shares because they believe in a company, because they believe the company is going to be doing well, they're going to make money, they're going to pay a dividend, all these different reasons why you think that the stock is going to go up in value. And so you will go into a stock with that hope that it's going to go up. And if it does, so you'll make money. You'll either make money again through a dividend that might be paid out, or just by selling it eventually and getting a capital gain. Okay, standard portfolios will consist of bonds and stocks. Those are the what I would call the building blocks of every portfolio. Okay, now there are other ways of accessing stocks and bonds besides buying them, because for small investors, sometimes it can be very overwhelming to try to put together a diversified portfolio of bonds or stocks. How do you choose them? How do you know how many to put in? Are you going to start going out and getting an investing degree in order to be able to invest, your 5,000 shekels? Most people aren't going to do that. So what has happened is over decades, there have been other financial instruments that have been created to allow investors to get diversified portfolios, access to stocks and bonds. Okay, the most common financial instrument that has been used for decades I don't know if anymore, but now it used to be mutual funds. The way to think about mutual funds in Hebrew, they're called a keren ne'emanut. Think of it, it's a big basket. Everyone puts their money in this basket. And then you have a manager of the basket, and they will decide what they are going to invest in. Now, generally, a mutual fund will have a mandate. Let's say a mutual fund will be investing in Israeli stocks, or a combination of Israeli stocks and Israeli bonds, or a combination of international stocks and international bonds. Okay, whatever their mandate is, so everyone who puts their money in this basket will then get a share of the total investments that are there. So as the total basket goes up in value or down in value, your individual stock holding of that mutual fund will also go up or down in value. It is the easiest way to get into the capital market here in Israel, because you don't have to have any special knowledge about the market. You don't have to know how to buy anything. All you have to do is tell your investment advisor at the bank, or you can do it yourself online, that you would like to buy 5,000 shekels worth of this specific mutual fund. It's a very, very simple process. At the end of the day, your money goes to buy that mutual fund. It's not traded over the course of the day. It's traded only at the end of the day. And then you'll have 5,000 shekels worth of this mutual fund in your account by the next morning. The simplest way to get into the market. It is a good option for a lot of investors because it's simple, because you have professionals who will be managing your money, and it's very flexible. You can set up a horat keva. You could set up a monthly deposit or purchase of a mutual fund, right? So if you want to start a long-term savings plan, so you can say, okay, when my salary comes in on the 9th, so I'm going to immediately take off 1,000 shekels and put it into a mutual fund. So you can leave a standing order to buy a mutual fund every month for 1,000 shekels. It's a very, very simple process. Okay, the two main disadvantages of mutual funds are their cost. Mutual funds will tend to be more expensive than some of the other options. So you can pay anywhere from, let's say, most mutual funds probably range between 0.5% to 1.5% a year management fees. Then some of the better ones obviously will be charging higher fees, and that can add up. That's expensive, right? Especially if you remember what I told you earlier, that the difference between a 6 and a 7% rate of return, or a 6 and an 8% rate of return over long periods of time can make a tremendous difference. So if you're paying high management fees, so then you're going to have less in your pocket. So that's one of the major disadvantages. The other major disadvantage is that if you're an American, so it's problematic for you to hold mutual funds outside of the United States. Okay, I'll come back to that a little later, but it's not so simple for Americans. Okay, Americans, if they want to invest in Israel, in the market, in the Tel Aviv Stock Exchange, The best way for them to do that is through individual stocks and bonds. Okay, when I say the best way, I mean the most compliant, the easiest way in terms of taxation, to avoid complications with filing in the United States and higher tax rates. The way Americans generally will invest will be buying individual portfolios. But it does create an extra hurdle for small investors, Americans who are starting off, because you have this kind of conflict. On the one hand, you really shouldn't be investing in mutual funds or even some of these other products that we'll talk about in a second. But on the other hand, you don't have enough necessarily to set up your own diversified portfolio. It is a bit of an issue, so there are some solutions, and we'll come back to it a little later too. Okay, besides mutual funds, there are also two Udot Sals, okay? And there's also another product called the Udot Sal here in Israel. But anyone who has invested in the last couple decades is probably familiar with ETFs, exchange traded funds. Exchange traded funds, as opposed to mutual funds, which are traded only once a day at the end of the day, ETFs, exchange traded funds, are traded like a stock, which means that you actually have to put a bid in, you have to put in a price that you want to buy at a certain, and it can be traded at any point in time over the course of the day. Generally, ETFs will track market indexes. Okay, yes, sometimes there are actively traded ETFs, but most ETFs are passive, which means that they are going to follow an index. Remember, an index is what we mentioned before, like the Tel Aviv 125 index is the top 125 stocks in the Tel Aviv Stock Exchange. The S&P 500 index are the 500 largest industrialized companies in the United States, right? So if you buy an ETF or a Udot Sal here in Israel, you will follow the returns of the underlying index. So you can get diversification, right? You can get diversification to 500 different stocks by buying one single stock or one single Udot Sal, right? An ETF. And that's tremendous. The other major advantage of ETFs they are low cost because they're run passively. So they're a fraction of the cost of a mutual fund. A mutual fund has a professional manager, and they charge higher fees. Udot Sal or an ETF is just going to follow the index. So there are ways for professionals to structure that management in a much easier manner that they're not actively involved, and therefore the fees, the cost structure is much, much, much cheaper. Okay, and therefore ETF fees here in Israel can be as low as 0.1%. It can go up to, it can even go up to 0.5%, but generally it can even be even higher than that. But generally it'll range in that level between 0.1 to 0.5. Sometimes you even have ETFs that will have no management fees at all. They're an excellent option. Unfortunately for Americans, it's the same issue that exists with mutual funds is the same issue with Udot Sals, with ETFs as well. So for small investors, you talk to your accountant into whether they really have a major issue. I know a number of accountants who are very lenient with regards to going into mutual funds or Udot Sals when it's a small amount of money, and if it's a larger amount of money, so then they will want you generally to become compliant. Okay. Another very important consideration is currency, right? So we've talked about the Tel Aviv Stock Exchange. The Tel Aviv Stock Exchange, most of the securities that are traded here are denominated in shekels, but not all of them. There are actually bonds that are denominated in dollars as well. In fact, there are bonds that are traded or that have been issued by the Israel government that also are denominated in dollars. So you also have to figure out, as part of your investment plan, how much exposure you want to the dollar and how much you want to other currencies as well. Israel to the shekel, the dollar, the euro, etc.